17th of June. It's the second time I'm recording this. Just spent half an hour talking to myself and pressed stop and it's not saved it. So try again. But yeah, too good price action to not journal down and save. So I'm happy to do it again. Okay. So for the first time in a while, we've seen some good volatility on both the pairs I trade, GJ and gold. Yeah, wasn't able to capitalise on it. Frustrating, working, not at the charts. When I was at the charts, people had fucking talked to me and work and whatnot and put me off. And I just couldn't trade really. I wasn't in the right place to trade, or I wasn't focusing on the charts enough, and I wasn't on the charts enough to take trades. So it is what it is. But let's break down price action today and see what, in my opinion, was the best ways to enter these trades, and also the fundamental reasons behind, especially this move on gold today. I'm not too sure of the GJ downside today. We have seen short-term strength in GXY, and we have seen a bit of a bounce today at these lows, at the lows of here. Bit of short-term strength on JPY, but still very bearish on it at the minute. So yeah, let's have a breakdown of gold first, because bigger moves on gold today, weren't there? Very strong moves to the downside, and my safe sells area below just got smashed yesterday due to the fundamental news and the FOMC conference statement, and yeah, we'll get down to that after we've brought down price action. But yeah, in terms of trade, I've already got all my best trade areas marked up from the previous video I just did. But I really do like it's just volume, and so much easier to take trades when there's volumes in the market, and it's good to see it again. Started to remember what it was like without fucking volume. It's very vital to have volume in the markets, especially when you trade in lower time frames. I like how there's, especially through pre-London, pre-New York and New York, strong moves to the downside. Especially on GJ, we'll see that after quite really clean moves to the downside on GJ. But very nice structured price action and bearish market structure on gold. And what I like about this first potential entry, is we're obviously trending. We're downtrending. We've got the buyers and the short-term strength of the dollar because of the FOMC meeting, and we're currently bearish on gold. And I like how price pushes up to these highs here, failures to hold above. Do you get a close above? But this candle is very important. After this candle, you want to see continued pushes to the upside to test these highs here and go and test 1820. We don't get that. We start to get these smaller exhaustion candles and a push down, break and retest of this low here, and then we get a strong push down. I like this candle here. You could have aggressive entries here, but I wouldn't really come toward taking that entry. I do like this candle here, strong bearish candle in comparison to these to the left, and you could have stops above the high. And then once we do, what the idea being, I know we're next to a key level, but if we would expect price to go and at least test these lows, which it does, you get a minor reaction to it, but then a rejection, a continued push to the downside, pushes down, gets close to this key level. That's don't know why it's showing as a bearish candle because it's bullish, but a bit of a lag in the data feed. But yeah, this candle here, you could either set stops at break even, or take your partial there and look for re-entries, or take the full entry, look for re-entries, but if you held your bias and set stops at break even, you was close to your entry here, but you do start to see the pullback play out, and we get that continued push to the downside. I like how price reacts perfectly to 1803. Perfect place to either take your full entry or close partials and let runners run. You do get another pullback, and what I do like is that we get the 10 a.m. candle. We're obviously very bearish on, got a bearish price action, 4-hour intraday candle closures, and then we do get a nice pullback on the 10 a.m. candle, 4-hour candle, and then we get a rejection of these highs here. I do like this rejection of the high, and I've signalled out this candle here as an entry point because we get a push down here. You can either enter here as well and stops above the high, but I like the double bottom scenario, and then a failure again to hold above these highs here and these highs here, a stronger bearish candle, and then you'd expect price to at least test these lows here, which it does, and then eventually crashes down to the key level, and then we get another small reaction to it, and then a retest, and then a small retracement, push down again. This is a good candle there to extend sell, sorry, with it being a strong bearish candle below the key level, and then price pushes down again from here, pushes down, retraces again. Nice triple bottom scenario, triple top scenario again. Failures to close above higher lows and correct this bearish market structure. So again, another potential re-entry point here. If you're not getting any of these points, another potential entry point. Projections here of these highs. Another slight double top. Enter there or there. Stops above the high, quite tight, so you could lose a small percentage if you wanted to. If you wanted to use dynamic risk, I think if that's what it's called. Use a set stop loss. You could only sacrifice. You only have to sacrifice a small amount of pips at that point. And then well, once you get below these lows, you're at the races. Strong bearish candle below here. I love these small exhaustion bullish candles here. If you was holding trades, you'd be like, okay, well, you can either take your partials there or set a break even if you're not happy with the R&R. Once you see the break and retest of this key level and this tiny bullish candles, another real sign of bullish exhaustion. And then you get that another strong bearish, beautiful candle to the downside and continued bearish market structure. Yep. So again, playing this bearish market structure down, another double top scenario on the pullback on the 1 minute. Nice to see the price action and see where the best points of pullbacks are to enter on these 1 minute time frames. You can really see the bull struggling here and struggling to pull back any further. Nice double top scenario again, potential re-entry point, pushes down, and then once you get this strong bullish candle here, or you get this exhaustion candles around here, a mixture of bearish and bullish exhaustion candles, and failures to break its previous low, you can maybe get out here if you're quite conservative, or just get out here when you get that strong bullish candle here, get out there, or maybe here once you get bullish market structure starting to form, close above them high, retest, failures to close, break and retest, and you start getting this more corrective structure. So anyway, so on to next entry, potential entry. I do like this as well here. As you can see, we get to this lower high here. We failed to trade above it once again. Similar patterns. Failures to breach lower highs. Rejections. Strong rejection. Strong bearish engulfing candle. I think that's a 30-minute. You could argue that's a 30-minute top wick as well, which is quite nice. Nice rejection. Expect price to come and test these lows at least. It does. Smashes past them. Extend your trades. Strong bearish candle. Perfect little bullish exhaustion candle. Like that again. I love looking at candle body sizes and all time frames. Helps me understand who's in control in terms of the bulls and the bears. You can see there's no momentum. There's no strong bearish momentum, and there's no appetite for the bulls to go up with tiny little candles like that. Continue push down, grabs of these lows here. Retracement fails to close below these resistance points. Triple top scenario again. Failures to trade above these highs. Strong rejection again. Take the sells down. I think I wanted to take this trade as well with some woman started speaking to me and working. Oh, pissed off when I look back at the charts. I did want to take this trade, I think. But yeah, it is what it is, isn't it? Crashes to the downside. And then yeah, once you could either close out after that strong rejection candle here. I think I probably would. I'm pretty conservative. Or once you get closes above this minor supports here, and you've already had a significant push to the downside, and you could get out at that point. But yeah, quite a lot of trades to be had. If you're on the right side of the market, it's clear to see that it's pretty hard to fucking lose when there's volume in the markets and you're trading with the trend. Yeah. So I'm going to look at the higher time frames as well. Not higher time frame, but the 30 minutes. I'm going to look at the 30 minute, for example, and see if there's any clues on these time frames as well. Yeah, it was more on GJ really. I like these exhaustion candles, small bullish candles. But there's a couple of bearish ones as well. But obviously, there's a lot more bearish candles than there is bulls. I like that wick rejection at this high. So yeah, I'm going to get on to, oh yeah, I'll just cover the fundamentals from yesterday. Why we got this push down yesterday, and so yeah, why we got this push down here, and why I believe fundamentals are important. So that's not point even doing that, but yeah, right, okay. So we had this strong push down as we had the FOMC statement come out yesterday. It was at 7 PM UK time, and one thing about news events, it's not trading on the actual news event at 7 o'clock is gambling. It can go either side, no matter what you know about fundamentals. The market, you don't know what the Federal Reserve are going to come out with. We are retail traders, and you cannot trade the news without it being gambling. So yeah, so you could even argue, oh yeah, but if I'd sell stops down here, then sweet, innit? Well, not necessarily, because you do have the whipsaw in scenarios sometimes where you'll have a push to the upside and they'll grab your buy stops, and then next thing you know, you're pushing down within seconds. So you're in both sides of the market and you're getting your ass kicked. So, and you can even get slipped as well if price action is that quick and your broker doesn't update quick enough. You can even get slippage and stuff as well. So I'm going to talk about why we had this short term. This might be this probably is going to be the start of a corrective, a first sign of corrective structure on gold USD and strength on USD pairs, which have been primarily bearish at the minute and generally getting their ass kicked. The US dollar, obviously, it makes sense that US will not allow for continued weakness going forward, and do what, just let the dollar continuously get battered and weakened with oversupplying it and stuff like that. So we will eventually see the corrective phases on gold and other USD pairs, which I've talked about in previous webinars to look out for. So I'm going to first talk about why investors had an appetite to buy gold and strengthen it. And the first reason was, well, the only reason was really, is because we had the FOMC statement and projections, and basically there was speculation of the Fed. The Fed was insinuating that they were going to initiate rate hikes for 2023. So basically going to increase in interest rates, which are low at the minute, to support the economy and consumers like us. But inflation is also rising as well, and with interest rates rising, that will stop spending as much. That will weaken appetite to spend and control inflation. And also, like I've spoke about previously, and some of you know, interest rates are important for strength of currencies, no matter what country it is, because of the constant swapping of money between banks, private, public banks, and investors. The interest made off the interest rates means a stronger dollar. Means the US dollar will be stronger because they're making more interest and money off these swaps of money. So that's what investors have been looking out for, and like I've stated, and a lot of people know that higher interest rates will strengthen the dollar. So the Federal Reserve coming out and Powell speaking about this and being optimistic for one, controlling the inflation and seeing it not as being bullish on it and not seeing it as a problem. Also the speculation and the talks of interest rates increasing, and also they talked about, they introduced that they will be having talks of tapering off stimulus, which is also oversupplying the dollar. So they've talked about, they started speculation of upcoming talks to taper off stimulus. So that again will stop. It will help towards the oversupply of the dollar and increase demand for it, and investors' appetite to start investing back in the dollar. So that's what gave this strong downside push on gold. I'm going to talk about this consolidation zone here. It's quite interesting to know why it consolidated around this price point after this push down. And the reason being is because Fed Powell was doing a press conference after the initial statement. Fed Powell was doing a press conference, and during the press conference, let's check this is still recording. During the press conference, basically investors sit on the sideline, because all it takes is for Fed Powell to come out and say something that contradicts the initial statement, which would then cause a correction on the news, i.e. people call liquidity grab, whatever you want to call it. But in reality, it's Fed Powell, because he's speaking. And if, like I said, if he was set to say something that contradicts and gives negative news on the US dollar, this whole move would have been corrected and be considered as a liquidity grab. But notice how price consolidates, and then as soon as he stops, the press conference finishes, guess what? Continued downside move, because investors know that Powell can't say anything to fuck up this sell bias on gold or the strength on DXY. So that's why we get the continued push down throughout the night and through today. Another thing I just want to point out is that like I was the same as well. I only traded technicals. I didn't pay much attention to fundamentals, and some traders do live by that. They only focus on technicals, and that's all that matters to them. But if you see, like on this situation on DXY, US currency dollar index, we did have this double bottom scenario, and I was talking about in previous webinars, but we could see a push to the upside and potential corrective structure. And as we were struggling to breach these lows here, we could see price cat bounce off here and then push up to these highs. But if you didn't have any understanding of fundamentals, then you wouldn't have an idea of what's going to cause this push up eventually, because it's all well and good. Like, why didn't price push up on any of these days here? Because there was no catalytic move to give US dollar that strength to push back up. But it's interesting to know and prepare and be aware of. All right, okay, the Fed Reserve is speaking this week, so maybe they'll give this push up. Like eventually, there's going to be a catalyst that pushes price up. So people who just purely trade technicals, they wouldn't know why it's fucking gone up. They'll just say, "Oh, it's eventually bounced off this low," but it's not. There's a fundamental reason behind it. Otherwise, it could have moved fucking long time, a week ago or 2 weeks ago. So for me, it's good to know the fundamental side of things as well, and to give yourself a bias, like a long-term bias and stuff like that as well. Because I've been talking about gold going into corrective phase, and i.e. becoming bearish soon, and it looks like it's coming into fruition now. So yeah, just gives you that extra, along with your technicals, the fundamental side of having a fundamental understanding, just gives you extra confluence in your sell bias or your buy bias. Okay, on to GJ. I'm going to break down the price action quickly now, so I've already done this twice, so I'm going to get this done with quickly. But with GJ, we had nice reactions to the psychological levels once again. These are psychological levels, by the way, not key levels, so 800, 500, 200, and flat levels. But yeah, I do like this. So, one, I like this candle here. I like how we've failed to trade above these highs here, and we've closed back below 154,500. And I also like, but we do have the 1 o'clock open here, so it might be more, conservative to wait for the top wick. It would be more conservative to wait for the top wick to be formed here, which it does, and then we get a double top scenario again, failures to close above these supports here, and then we get an eventual crash down, chops down, and as soon as we breach these lows here, then we crash down to 154,200. Get closures below, consecutive bearish candles, closures below, continue, just bleeds down to the downside, keeps going, keep extending your trade, taking partials along the way, successive bearish candles, perfect trade really, innit? Volume in the market's good to see. Then we get a perfect reaction to 153,800. And you could have even took corrective buys there, high risk. I'd rather wait for sell when it's predominantly bearish at this time. So, but you could have took it if you wanted to. You have big balls. Anyway, you get a pullback, and then you get a fair, and then a break and retest, closure back below 154, sorry, and then you get a failure to close above these highs there. You get a close below, and then what I like about here is failure to close above this support. You get a 30-minute candle below 154, sorry. You get a bearish candle below 154, 30-minute top wick, rejection of this high here, closure below this minor support, and then you could take a trade here with the idea that, okay, I expect price to at least test these lows and these lows and these lows. Set stops at break even if you want. We get to these lows here, small bullish exhaustion candles, order block formed, wick up, failure to test this low here, failure to close back above it, and then we get that crash down, weaker bullish candles, stronger bearish candles, perfect break and retest of 153,800. Once we get past this low here, we get that continued push down, another double top scenario, crash down, and then even later on in the session, 5 o'clock. I could have took this trade if I look at the charts, but I just naturally don't because of the time of it and stuff. But it's something I just keep banging my head on the wall sometimes to do. I need to do a bit more, just keep an eye on market structure, because when there is volumes in the markets, you can still catch a little piece of it, even if it is later on in the day, because bearing in mind it's still early in the US and stuff. So, and if the volume's there and there's fundamental reasons behind it and strong volume markets, then why not? especially when you're getting a double top. The safe sells I had marked out previous days. Safe sell area at significant lows. That's at the significant low before below the new high we printed up to 156. So that was for me a break of bullish market structure. We had a double top scenario at the key level, 153,500, and that'd be perfect to take an entry here on this candle, expecting price to at least test these lows. And if we get closures below, which we do, we get a nice meltdown to daily support level of 153,200, and then a rejection of it. Once you get your rejection, close above it. Thank you very much. I'll take that 3 to 1. Correct decision. Price pushes back up. So now it's interesting to see that we have actually. It looks like we're going to close above this safe sell area I had on 153,500. But we have had quite a strong bearish push to the downside on GJ. So it wouldn't surprise me if we continue to sell down. But we are closing above it, so we are technically respecting it. We've also tested this daily high here, wicked off it perfectly, but we're now still starting to close above this order block range on the daily. For me to continue to buy GJ back up, I would need to see a strong intraday daily support formed around these levels, and a sign that this bearish move is potentially going to pull back or be corrected. If not, we do start getting closures below this level and this high here, then I'd be confident taking sells and targeting this clear traffic to the left here on the daily range and on the lower time frames, trying to capitalise on this move here to these highs there of 151,800. So that's what I see on GJ. In terms of gold, we've had 2 days market, 2 days price action correct about about 2 weeks worth of May bullish price action. So yeah, looks like we've broken out of that bullish uptrend, and we've now got a bearish bias on gold for the time being. And I'd like to point out again, what we've been talking about on the weekly, that we could have seen a similar scenario. This is what we're talking about, the interest rate speculation or coming out of lockdown and stimulus being tapered off, stuff like that. We could see a scenario that we are at all-time highs, and we could see buyers be relieved of the market, taking the positions at the highs, and sellers coming into the market and relieving them of the positions, and seeing a corrective phase on gold, as we did see at the highs of 2011. We see this consolidated markets at the high, and eventually, once we get below these lows here, then we do start to see that corrective and bearish market structure on gold, which plenty of pips to be had. That was in 2011, as you can see, and that's what I see. Similar, I feel we're in a similar scenario on gold at the minute, all-time highs, and eventually we should get that corrective phase on gold and be able to play down some sells on gold. So obviously, if we get breaks below eventually these lows here, that'll be another strong indication. We get that fundamental bias to go along with it. It'll give us a strong indication of a corrective phase on gold and bearish market structure being formed, and a pullback on the weekly time frame like this area here. So yeah, that's everything.